Hey everybody, welcome back to my channel. So today, girl, we are going to be talking about collections, charge-offs, and repos and what they mean for you if you have them on your credit report, or if you're in a position where they may even be coming on your credit report, or you're just trying to find out a little bit more about collections. Who knows? So if that's something that interests you and you're looking into that, then keep on watching. So I want to start this video off by saying that my name is Tamika, better known as Miss Meek Meek here on YouTube, and I am someone who works in banking. I am a branch manager, and I also underwrite loans as a part of my job. So with that being said, I just want to share some of the knowledge that I have and what I know when I look at credit reports and what we're looking for. So let's just jump right into the So let's talk about collections. So collections are usually applied to your credit report after the lender or the creditor have been without a payment for a few months. So when it reports late as 30, 60, 90, and 180 days, so forth. Well, then usually after 180 days, it's reported as a collection. Now, a collection can also occur when you start missing your payments or when you have not paid the payment that you owe in full. Meaning that you're only making partial payments. So, you'll have people who their car note is $600, but they'll be paying like $500, $550 this month, $400, because that's all they have. Well, you still can be reported as a collection because you're not making the full obligated payment. So, a collection can remain on your credit report for up to 7 years from the day that you miss your first payment. Now, I do want to make sure you understand the scoring models are different from medical debt and credit debt, okay? So it can have a different impact on your score if you have medical collections versus actual credit collections. And also, if you have debt that's less than $100 that's being reported as a collection, that can be scored differently as well and may not have as much as a heavily impact on your credit scoring. I hope that makes sense. If you paid your collection, it will be marked as a paid collection on your credit report, or you can see if you can get it removed altogether. If you believe or you know that something is being reported inaccurately on your credit report in collections, you need to make sure you dispute it. So for example, if you owe Bank of America for a credit card and you paid it and Bank of America never updated your credit report to show that it was paid, you can upload your receipt on the website to show that this was paid and it's being reported inaccurately, and Bank of America has, I believe, 30 to 45 days to reply to the dispute and fix it. Now let's go into charge-off. So a charge-off simply means that a creditor has attempted to get a hold of you several times and they have not been able to get a hold of you, okay? And it is a derogatory mark on your credit report, and it can cause a serious negative impact. They usually occur after 6 months. So this means that they have been trying their best to get in touch with you. They put you in collections and you still ain't trying to pay. Now it's charged off. Now, just because it's charged off does not mean that you are not obligated to pay it. You still owe that creditor that money and you are still responsible to pay it. Here's the gotcha. If you pay it, it still can be reported negatively. But, there is a but. They are less of damaging to be paid than to be unpaid. So let me give you an example of what I mean by that. So let's say you had a Target credit card that was charged off and paid back in 2017, okay? But then when I go further down your credit report, I see where you got a Capital One credit card and a Credit One credit card. You don't owe much on them and they've been paid exceptionally well since you had that charge off and it was paid, right? I'm more likely to give you a credit card because you've been doing well with the credit that you have, and apparently you've learned your lesson, right? But if you have an unpaid credit card and it says charged off and you got other credit cards late and all that, you're most likely going to get declined. I hope that makes sense. Okay, let's move on. So let's go into repos. So a repo is basically where the lender has tried to get in contact with you. They've called you, they sent you emails, they sent you letters, they call the people that's on your application to say, you know, hey, this person's responsible. Everybody trying to find you. Nobody can find you. You're not answering anything. You're ignoring the letters. Boom. You get a letter saying that we're going to repo the car if you don't make a payment. Well, here come the repo man. Going to get that car, right? Now your car is repoed and it's reported on your credit report as a repo. Now, you will have somebody say, well, I turned my car in. I turned that car in. I gave it back. It didn't work. That's still considered a repo. It's called a voluntary repo. That means you still owe that money. No matter how you feel, if you got a car in a wreck, if it just stopped working, whatever the case may be, you owe the money for the vehicle. Now, let me explain a little bit how a repo works. If you got a repo and so the bank is going to take the car back, okay? They're going to try to sell it or they're going to take it to an auction. If you owe $20,000 on that car and they are only able to get $15,000, you owe $5,000 to that bank. If you don't pay it, it's still going to be considered on your credit report as a repo. If you get an involuntary repo and you choose to turn that car in, it's still the same scenario. You still owe that money. Now, I want to make sure you understand that, you know, with the repo, you can still get a car, but instead of getting that 2.5 or that 3% interest rate, you're looking at 25% interest rate. I mean, there are some lenders out there that will charge you out the yin-yang just for that car. So that repo weighs heavily on your credit. So when you have a repo and you know you're like, I'm not gonna pay that car, and you choose not to pay it and you let it get repo, or you turn that car in and you don't pay off that balance, it's going to be considered a repo. And now the lenders are looking at you like, okay, well, we'll give you a car, but we're going to charge you so much. So what that means is your car loan is $500 a month. Your interest is basically going to be $300, and then $200 will go to principal, because that's how much in interest they're going to charge you just because you got a repo. Now, if you got a repo 4 years ago, and you fixed your credit with everything else, and that repo was 4 years ago, and you got a house, you pay everything on time, your credit cards, I mean everything, you got a new car, everything has been paid on time. I could see if you got a car and you want to refinance, I could see refinancing it and giving you a better rate, because you've proven that you can handle your credit now, and whatever the situation was 4 years ago, you're in a better place right now. So understand that when we're looking at your credit report, we're only looking at paper, and we're trying to understand your life story. And again, I told you this before, your credit report is your financial life story. So, you know, collections, charge-offs, and repos, they may seem like the enemy to you, but they tell a story to us. And to us, you are having some issues, or, you know, we can only read into what we think. So I hope that this video was helpful. Please leave your comments below. Make sure you like, give this video a thumbs up, and please subscribe. When you subscribe, make sure that you hit that notification bell so you do not miss any of my videos when I upload. And until next time, ladies and gentlemen, bye.